Good evening. Welcome to ERA Singapore's 2026 Top 10 Property Trends to Kickstart 2026 with clarity and confidence. From macroeconomic forces to policy impacts and buyer sentiment, we'll cover the top 10 trends that will shape your real estate strategy this year. Before we begin, please note, while every effort has been made to ensure the accuracy of the information shared today, ERA accepts no responsibility for any loss or inconvenience caused by errors or omissions. The insights, opinions, and examples presented are for informational and educational purposes only. As the property market is dynamic, we strongly encourage you to consult an ERA trusted advisor before making any property-related decisions. It is my privilege to introduce our speaker, CEO of ERA Singapore, ERA Asia Pacific, and APAC Realty, and a trusted voice in our industry, Mr. Marcus Chu.
Hi guys, let's kickstart 2026 with top 10 property trends. So today I'll be sharing about these top 10 trends in 2026, focusing on these 5 areas. Firstly, I'll talk about the macroeconomics, followed by the private new homes, private resale home, HDB resale, and also landed homes. So let's get started. The first trend, Singapore property remains a safe haven amid global uncertainty. Global heightened geopolitical risk is certainly in the horizon in 2026. Just take a look what is happening and what appears on the headlines of all the media every day. From US-Venezuela friction, Cambodia-Thailand border dispute, US-China trade war, Israel-Gaza war, Iran-US tension, Russia-Ukraine war, Taiwan Straits tensions. So many uncertainty and risks all over the world. And any kind of misfire can actually cause serious disaster. How about the small red dot here in Singapore? Are we facing a crisis? I don't think so. In fact, I think the country is in positive economic growth. Actually, our government has done a great job and they are very cautiously optimistic because every quarter in 2025, the Singapore government have actually forecast the economic growth between 1 to 3% in first quarter 2025, second quarter 0 to 2%, third quarter 1.5 to 2.5%, and fourth quarter at 4%. And guess what is the real GDP achieved? They are all exceeding what was forecast. And what this means is our Singapore government is cautiously optimistic, and the real achievement is actually better performance. In fact, the full year of 2025, Singapore GDP have rise by 4.8%. How about 2026? So moving into 2026, MTI has forecast the GDP growth to be between 1 to 3%. And guess what will be the real GDP? To me, the real GDP in quarter 1 2025 will be higher than what is forecast right now, between 1 to 3%. So it should be higher than that. So what would this mean to the Singapore market? Well, many analysts, including Morgan Stanley, says that Singapore market is a safe haven and raised price target for this sector. Meaning funds are flowing into Singapore from all parts of the world because this place in Singapore is a place where it is perceived as a safe haven. So let's talk about the cause, effect, and market impact. Global uncertainty is the cause. The effects is investment funds flows into Singapore as a safe haven. And market impact, real assets like property will be the safe haven assets. And if Singapore property is that safe haven assets, demand will be up, price will be up, and therefore profit from property investment will be up. Otherwise, let me show you what is uncertainty-driven profits. These are all the properties that have achieved highest profit for 2025. And in fact, they are the 2025 TOP properties, which means properties that have just completed. And these are the new developments that was sold about 3 to 4 years ago, namely Pasir Ris 8. The profit that is achieved by the buyer of the new projects in Pasir Ris 8 have actually benefited as high as $785,000 profit. Pullman Residences at Newton, $765,000 profit. And more Pasir Ris 8 projects, they are all in 6 to 700,000 profit. And the rest here. So I just want to show you that in a very uncertain market, there are savvy investors that makes a lot of profit. And these are the profits made from TOP condos, which is sales of new development purchase way back 3 to 4 years ago, where global uncertainty is already happening. So how about MOP ECs? Similarly, MOP ECs that has just gotten their MOPs in the year 2025, owners of all these newly completed ECs actually receive their pot of gold that is as high as more than 800,000. Can you imagine? Actually, these property owners who have bought their properties during the uncertain time have made a lot of profit. So actually, global uncertainty isn't a bad thing. If we talk about safe haven assets, property is the safe haven assets. And there is indeed uncertainty-driven profits for property ownership and property investments during uncertainty time. So trend number 2, Singapore interest rate bottomed out. And we all know that over the last 1 year, mortgage rates have actually fallen quite a lot. Otherwise, just let me show you, whenever there is a Fed rate cuts, mortgage rate cuts actually also move in tandem. So all this started in September 2024 when the Fed interest rate starts to drop. And all the way to January 2026, the Fed interest rate right now is about 3.75%. Whereas for mortgage rates in Singapore, since September 2024 to January 2026, interest rate have actually fallen from more than 3% to almost 1%, which is 1.18% right now. So what this means is actually right now is at a very low mortgage rates environment in Singapore. And will these mortgage rates continue to fall? So let's take a look at what most analysts predict in 2026, moving on to 2027. For the medium Fed rates projection, in 2026, it is projected to be about 3.38, all the way to 2027 at 3.13. Whereas Singapore 3 months SORA historical average for 2026, it's predicted to be 1.5. And currently at the end of 2025 is 1.2. Meaning this year 2026, mortgage rate may start to rise and stay stable at 1.5 over to 2027. So falling mortgage rates spikes property transactions and PPI. And this is evidence from the past year. Whenever interest rate fall, transaction volume will rise. And whenever interest rate rise, price will slow down in its growth rate. But whenever interest rate fall, price will grow more aggressively. Why? Because demands will be higher when interest rate is at its low. So we can see that in the show flats preview of the new project launches, it is crowded last year. because of that sharp mortgage rates cut. And it is so amazing that some of the project launches have even achieved more than 90% take-up rates on the weekend booking. And this has never been seen before over many years. So I want to share with you this is interest rate does have a big part to play in property transactions in Singapore. So if interest rate is going to bottoms up this year, I think perhaps you can make your big purchase decisions faster before interest rates start to creep up again, because it will benefit you. So let's take a look into that cause and effect and market impact. So the cost of falling mortgage rates will lead to effect of lower borrowing costs, reduced monthly repayments. And to homeowner, this is an advantage. So therefore, the market impact is boost property transactions and property prices. So act fast. Most analysts project SORA to potentially rise in 2026 all the way to 2027. Let's move on to trend number 3. Trend number 3, strong take-up expected for ECs and OCR launches in 2026. So if we take a look at the number of new home projects that is going to launch in the year 2026, these are the numbers. It will be around 11,910 in total number of units. Well, the number that is slated to launch in the different regions are as follows. CCR is about 1,004 units, RCR 2,000 units, OCR 6,001 unit, and executive condo about 2,003 units. If we put into the percentage of the composite of launch in all these different regions, it is 51% in OCR, 19% for executive condos, and for RCR is only 17% and 12%. Well, having said that, if we compare this percentage in different regions, OCR have actually risen from 30% to 51%. And ECs have actually risen from 11% to 19%. And as for RCR and OCR, is the percentage of the composite number of units of launch actually have fallen. For CCR is at 16% to 12%, and for RCR is 27% to 17%. So a large majority of launches in 2026 will be targeted at outside core central region and executive condos. Whereas the rest of the launch is in RCR and OCR, which make up of minority of the launch. So that will bring us to some effect. Okay, so let me explain. All right, so this fury of OCR and EC supply in 2026 are as follows. 9 OCR new launch, 5 EC launch. Total number of units is about 8,400 units. So at the north, there is 4 condos and 2 ECs. So what projects are these? These are Lentor Gardens government land sales, Chuan Grove GLS, Chanchuru Close GLS, Upper Thomson Road GLS, Woodland Drive 17 GLS, this is the EC, and also Sembawang Road GLS, this is also EC. So these are all the 6 projects that we'll be launching at the north. How about at the east? There's 2 condos, 2 ECs. The 2 condos are Pinery Residences, Bayshore Road GLS. The 2 ECs are Coastal Cabana and also Riviera Tampines. And how about at the west? At the west, there's 3 condos and 1 EC. So the 3 condos are Nara Residences, Tengah Garden Avenue GLS, Lakeside Drive GLS, and the 1 EC at the west is Sanja Close GLS. Quite a lot of launches, right, in the year 2026. Actually, even though the number of projects all right, in 2026 launch versus 2025 launch looks like fewer, but the number of project units that is going to launch is actually more than 2025. So all the new OCR launch in 2026, altogether, there are 9 projects in the pipeline, totaling 6,000 units. These are all the private condos OCR launch. And these are the EC launch, 5 number of EC launch in 2026. Total number of units is about 2,003 units. So many OCR and EC launch in 2026. What's the implication here? Now, as I've said before, in my previous seminars, every time the developer launch a project, the number of unit launched for that year will be quite close to the number of units sold for that year. So, which means whatever that is launched will eventually be sold. All right? So let me show you this chart here. If there is more new launch, it will mean that it will drive higher sales volume for that year. So 2026 will be a year of about 11,910 unit launch, meaning 2026 sales volume will also be close to this number of unit launch. Because every year, if we look back, the number of unit launch and the number of units sold, they are all quite close. Otherwise, if that year falls short of what the sales volume falls short of whatever that is launched, in the next few years, it will be sold. Because developer has to pay additional buyer's stamp duty if they do not clear 100% of the units in their development within 5 years from the year of purchase of the government land. So what's the cause, effect, and market impact with the fury of launches in OCR and executive condo? Here you are. If there is more ECs and OCR new launch in 2026, there will be high transaction volume expected in OCR in 2026. And what will this means is there will add a lot of hikes in outside core region. And this will set new benchmark prices in OCR. So 2026 is poised to set new price benchmarks across all 3 regions, especially in OCR. And the next question is, how about RCR and CCR? Well, this brings us to trend number 4. I think CCR and RCR may offer better value relative to past years. Let's take a look at the chart here. It shows very strong OCR price growth, and this actually positions CCR and RCR as relative laggers. The price of OCR have actually achieved a 33% growth over the past 5 years, RCR 21.6% and CCR 14.1%. So if OCR is able to achieve such phenomenon high growth, it actually positions RCR and CCR as laggers. Won't you agree? Well, there are limited remaining units from second half 2025 new launch for all regions, from CCR to RCR to OCR. The number of remaining units is actually falling and falling and falling, meaning a lot of units is sold on a daily basis. And this actually means that there is not many units left for potential buyers who wants to buy units that have just launched a few months ago. So if there are also fewer launches in CCR and RCR in 2026. So as you can see here, CCR and RCR percentage of launch is about 30%, and for RCR and EC is about 70%. So the number of units that is slated to launch in 2026 in the central region has actually shrunk, meaning limited supply in the pipeline. And potentially, this could drive the next growth cycle in the central region. So the project that will be launching in the central regions includes all these very interesting projects in Keppel Bay Plot 6, Duneon Road GLS, Holland Link GLS, Newport Residences, Dorset Road GLS, River Modern. So these are CCR launches in the pipeline. Next, Media Circle Plaza A GLS, former Pastoria View, former Thomson View. And these three are new launch in RCR. Post OCR run-up, CCR and RCR project poised to lead the next wave in 2026 because OCR higher price acceptance is expected in 2026 with a flurry of launches. So right now, OCR price will be creeping up from where it was in 2025. What do you think will be the new launch prices for CCR and RCR that is in the pipeline to launch? They will be higher, isn't it? Same as OCR? Yes, they will definitely be higher. So what is the cause and effect and market impact here? So if there is more OCR new launches setting higher benchmark prices and fewer new homes in CCR and RCR, the effects is new OCR price benchmark will set to lift CCR and RCR value. And the market impact is the current existing CCR and RCR limited units may offer very attractive value propositions for potential buyers. So perhaps you can take a look at the remaining units in CCR and RCR. They are all very attractive price and value proposition for you. Trend number 5. Developers remain keen on prime land sites. So we took a study on all the developers in Singapore who host existing land sites. Most of them have already launched their projects, except for government land sales that was purchased last year. Most of the developers have actually sold out many of their projects. So we categorize all the developers into 3 categories, from large developer to medium developer to boutique developer, and do a studies on the number of available stocks in 2026, beginning of this year. How many units are left over, all right, that is not sold yet? So for large developer, more than 1,000 units, 3 developer. 500 to 1,000 units, 2 developer. Less than 500 units, 3 developer. And these available stocks actually includes remaining units plus stocks in the pipeline, which means land that is purchased but have not launched yet. So it's going to launch in 2026 and 2027. So these are the available stocks. So actually, there are 3 large developers that have less than 500 units or in the pipeline plus remaining units. So that is less than 500. Meaning these 3 developers, large developer, they have fewer remaining units. They need to replenish their sales inventory, which means they need to buy land. Okay? So similarly for medium developer, less than 500 unit, we saw that there is 7. For boutique developer, less than 500 unit, there is 16. So among all the developers, as you can see, 26 developers is actually short of sales inventory. And they will be looking for government land sales for purchase or even en bloc sales. So this is evidence from the competitive bidding in 2H 2025, which highlights developers' strong appetite for sites. Just take a look at the recent sales at Bukit Timah Road that is in the core central region. There's altogether 8 developers bidding for that site. No wonder the sales price that is achieved for the land rate is at record of 1,820 for last year. So what about in the EC segment? In August 2025, we also witnessed 5 developers that sent in their bids for Woodland Drive 17 site and set a record land rate at 782 per square foot per plot ratio. So the developer are all actively bidding for land. And for every GLS site won, bear in mind, many developers walk away disappointed. So just take a look at the last 3 GLS sites, such as Dorset Road. There were 9 bidders for that site. And out of that 9 bidders, 1 won, the other 8 will walk away disappointed, isn't it? How about at Bukit Timah Road GLS? There were 8 bidders. 1 won, 7 disappointed. Next, at Bedok Rise GLS site, 10 bidders. 1 won, 9 disappointed. So having said that, if there is so many developers walk away disappointed, what will they do? They will continue to bid for the next GLS site. So their appetite has not been filled yet. They are still hungry for land. They have to buy something in order to replenish their land bank and sales inventory. So if you zoom in at all these developers here, you probably know who are the developers that will continue to bid for the next GLS site because they have not won any government land sales yet. So what is the intense developer competition's effect? It will drive new island-wide record GLS land price, isn't it? Because if every time you go in at a very conservative bid for the government land sales, you will never be able to buy something. So if developer needs to secure a land site, they have to bid higher. So for every GLS site, it is so predictable that the government land price has actually risen every other time. Just take a look at 2025 land sales. We actually saw record bid in places like Bukit Timah, Daniel Road, all right. In 2024, places like Bayshore, Chuan Grove, Holland Link, and also River Valley Green. So every time when there's a GLS land site for sales, we expect to see record GLS price set. Cause and effect market impact. High take-up rate of new launches in 2025 have actually caused depletion of land bank and sales inventory for developer. So developer will have a rising appetite to replenish their land bank. And what's the market impact? The market impact is intense developer competitions that will drive GLS land price. Of course, at the end of the day, if developer bought a land at higher price, it will also means that they will be pricing the new launches in the future at higher price. So coming back to 2026, these are all the land sites that is slated to be offered for sales to developer. In 2026, expect more intense developer bidding for all these GLS sites. Trend number 6, new sales versus resales price gap widens. So if I said in trend number 5 is that if developer is going to buy the government land at higher price, they have to position the projects to be very attractive and at the same time also at higher price than what was previously launched. So it's called benchmark price sets. Well, having said that, higher benchmark price will also require higher price acceptance. So 2025, we do see higher price acceptance from the high take-up rates. So every time when new homes launch, there's higher price acceptance. Resale price, if it's not rising as fast, will create price gap, isn't it? We call that price disparity. So over the years, we see widening new sales and resale price gap. All right? In about 5 years ago, the price gap is only about 35.4%. And right now, it is about 58.2% price gap. So does this make resale more attractive? Well, for some of the seminars you probably attended, it says that the growth of the resale homes, particularly the very old resale home, the growth of the property price will not be as fast-paced as those who have bought new homes and resell it in the resale market later. The growth of the new home price will be steeper, will be faster. So to a certain extent, that is true, but of course, it also depends on which resale property you're talking about. Now, because of the widening price gap between new home and resale, there is indeed some value propositions for resale properties. So I would like to show you the opportunity in the resale market and how some property buyers have actually made purchase in the resale market and eventually sold it in the resale market again and make quite substantial gains from the profit from the resale market. So take, for example, this unit at Rivergate. All right, this unit at Rivergate, there were transactions shown in November 2011 that is sold at 3.1 million. The owner of this unit actually pocketed 610,000 plus over a holding period of only about 4 years. And that is an annualized growth rates of about 4.53%. Very good. And at the same time, the same unit that is purchased by the buyer at 3.1 million was sold at 3.8 million at the year 2021. Holding period is 9 years, 4 months. And the profit that is achieved by this owner is 658,000, all right, which is equivalent to about 2.05%. And let's put it this way, the resale properties market also provides opportunity when there is a huge price gap between new home and resale home. So for RCR unit, for very old projects at Bradderview, we also observed that 11 September 2023, there was a transaction and the owner actually made about $500,000 over a period of 12 years. Of course, this owner actually purchased from the previous owner in the year 2010, and the previous owner makes about 145,000 over a period of 3 years. Next, we have resale homes in OCR. For example, Riviera. In 2023, there is a recent sales profit of 380,000 over a holding period of only about 4 years, 11 months. And at the Bayshore, there is a transaction registered recently at September 2022. The profit make is about 410,000 over a period of 3 years. And for executive condo at Sea Horizon, there was a sales transaction recently on 16 October 2024. There was a profit make of 269,000 over a period of 3 years. And at the Minton, recent transaction at January last year, there was a profit make of almost 400,000 over a period of 7 years. So when there is a price gap between new homes launches and resale home launches, especially at resale properties that is close to proximity of the new launch, it also means some opportunities for buyers who are looking into the resale private segment. So the cost of new sales and resale price gap widening will have an effect where some buyers find more values in the resale market, and this means resale transaction volumes may rise, leading to price increase in the resale segment too. Next, let's talk about new TOP supply, which brings me to trend number 7. 2026 will see new TOP supply rebounds, but still near multi-year lows. Okay, just take a look at this chart. So we feel that limited TOP supplies drive spillover demand into new home market. So our views is that limited TOP supplies will drive spillover demand into the new homes. All right, we witnessed this in 2023, where the TOP supply is at all-time high, close to 20,000 for that year. But for new home market transaction, actually it has fallen all the way down to its bottom. And in 2024, last year, when TOP supply actually fallen from its all-time high, all right, to almost half the number of units that was TOP last year, the number of new home transactions starts to stabilize and eventually pick up a lot when the TOP supply actually continue to fall. So whenever TOP units is falling, new home transaction will rise, because these are called the spillover effects. So if there is very limited TOP supply, it will also means there is more new home transactions. So in 2026, we will see a rebound in the TOP supply. What this means that this will affect the new home demands. Actually, if you take a look at it, the number of TOP units that is presented in 2026 are not exactly very high. In fact, it is not even near the 10 years average of 8,000 units. So I think that 2026 new home transactions will be as strong as 2025. So what is the cost effect and market impact here? So if there's fewer resale completion that's expected in 2026, resale home supplies tightens, meaning limited TOP supplies will drive spillover demand into the new home market. Let's move on to trend number 8, pertaining to the HDB segment. There will be more MOP supply and acceptance of million-dollar flats. So there will be more million-dollar flats expected in 2026. Won't you agree? I think it become a norm, because most of the million-dollar flats are flats that is in the prime locations, or rather the central locations, that is very attractive for buyers who are looking for space and at the same time convenience. So you don't mind paying more than $1 million for a relatively new HDB flats. Over 80% of flats reaching MOP in 2026 are in popular estates: Punggol, Queenstown, Tampines, Toa Payoh, and Bedok. They are all popular estates, aren't they? So these large BTO projects will reach its MOP this year, which means there's a lot of interest focusing in this location for the potential resale buyer. These are the projects such as Waterfront at North Shore, Punggol, 2,322 units. Sky Residence at Dawson, Queenstown, almost 2,000 units. Tampines Green Verge, almost 2,000 units too. Archive, Oasis, and Crescent at Toa Payoh, almost 1,006 units. And Bedok South Horizon at Bedok, almost 1,000 units. Well, if there's so many popular estates flats that is reaching MOP, So record-breaking prices already recorded in these popular estates, right? Such as the 3-room flats in Bidadari recently sold at a record price of 930,000, and a Queenstown 5-room loft sold at about 1.658 million. So the cause and effect here is popular estates command higher resale prices, and this affects more capital available from the seller for upgrade into private homes. So the private home price growth will remain sustainable. Let's move on to trend number 9. Higher BTO supplies moderates HDB resale price growth. Now, certainly we feel that over the last few years, BTO flats has been offered to the market at a very aggressive pace. So this phenomenon is not uncommon because over the years, HDB has been increasing its BTO supply over and over again. Well, if you take a look at the last decade, in 2011 to 2025, there is a total number of BTO flat supply of 115,000. And so over this decade, between 2021 to 2025, HDB increased BTO supply by 120,000 homes. And if we take a look, what is the cause and effect here is whenever there is a lot of BTO flats launch, okay, eventually it will goes into MOP. All right, so from the last decade to this decade, eventually it will goes into MOP. It's just that this decade here, the MOP is divided into 2 segments of the HDB category. There is the standard flat segment, which will MOP at 5 years occupancy period. Whereas the Prime and Plus flat has an occupancy period of 10 years, which is longer. So it will be spread over a longer period of time for its MOP. So every time when there is a huge number of BTO launch, this property price index of HDB resale flat actually witness a fall over a period of time during the huge BTO flat supply. So as observed during that last decade, we see that the HDB price index actually reached its peak and start to fall to its bottom when there is huge BTO supply. So currently that we are at this point where there is huge BTO supply, and I believe that HDB price index is also at its peak, and there is a chance that this phenomena will repeat like the last decade. So the HDB price will moderate its growth or probably even fall, all right, to a point where it start to pick up again like the last decade. And when it start to pick up is when there's a huge MOP supply flooding into the market with new MOP flats. And that's where we see price rise over the last few years, especially over the last few years, because there's a lot of MOP flat supply. But moving forward these few years, the MOP flat supply are actually tapering down until you probably see that big MOP supplies only after 2030 onwards. So this means that in the next few years, we will probably see more BTO supplies that will moderate HDB resale price growth over the long term. So this table here, interestingly, I want to show you the BTO flats launch over the last 5 years are the following. Especially 2025 all the way to 2027, there will be more than 55,000 BTO flats that will be launched. And the resale market have actually witnessed a fall in transaction. Like last year, the transaction number is almost 25,000 as compared to 2024, almost 28,000. All right, so when there's more BTO flats launched, the HDB resale market numbers will actually taper down. And that means the price growth for HDB resale market will also slow down, all right, during the period where there's lesser transactions in the HDB resale market. So what's the cause and effect here? Let me summarize. When there is a higher BTO supply from 2021 to 2025, plus introduction of Plus and Prime flat with longer MOP and subsidized clawback, it will have an effect of moderating resale flat price growth. And this will contribute to a more sustainable resale market over the long term. Right? Isn't this what our government is trying to achieve? All right, a very affordable and sustainable HDB market. Next, let's move into the final trend, trend number 10, sustainable long-term price growth for landed properties. Landed home segment has recorded robust growth over the past 5 years. In fact, over the last 5 years, landed price growth by almost 30%, as compared to non-landed of 23.7% and HDB of 30.8%. So these are all the growth rate over the past 5 years. So landed growth rates is quite consistent, except for the year 2024 at 0.9%. The rest is like last year at 7.7%. And the previous year is like 8% and 9.6%. And for non-landed private properties, the growth rates have actually as high as 8.1% in 2022. Right now is at 2.4% in 2025. And for HDB, the percentage growth at 2022 is 10% and last year is 2.9%. So if you take a look at last year price growth, the one that has the most robust growth is landed homes. So for last year alone, if we observe over the quarter 2, quarter 3, and quarter 4, the growth rates for landed homes is also pretty consistent as compared to private condos and HDB resale flat. So it looks like landed property price will continue to rise. Will you agree? Of course, we have to take a look at the number of transactions. So this table shows you the residential transactions volume by segment over the last 5 years. And our observation is landed home consistently record the lowest transaction volumes because there is limited supply of government land sales for private non-landed homes. There's en bloc sales for private non-landed homes. There is also BTO for HDB resale flat. So there isn't government land sales for landed homes. So landed homes has to be sold by the current landed owner. So therefore, the number of transactions is limited to what is the number of landed homes in Singapore. And we all know in a land-scarce Singapore, the number of units of homes is limited in the landed segment. So landed itself only form about 5% of the overall homes in Singapore. So for non-landed is as many as 24%, and for HDB is about 71%. And this is in the statistics that we obtained for 2024. So we backtrack all the way to 2015, which is about 10 years ago. Landed homes is about 6%, and non-landed homes is 22%, and HDB is 72%. So even though landed home has increased from 72,000 to 74,000, the composites of ownership of landed homes has fallen from 6% to 5%. What this means is there's limited supply of landed homes and also limited transactions. There is a land betterment charge that will be imposed to the developer of that plot of land. So this means that if there is a higher land betterment charge, the developer who had bought that land plot will have to sell that landed property at a higher price also. And coupled with higher construction costs, it will continue to push the new landed home prices higher in 2026. And like the private condos market, whenever there is a price gap between new launch condos, in this case, new launched landed homes, there will also be a rising effect on the older landed home prices. So the cost about the landed segment is limited landed home supplies, which will have an effect of scarcity premium that will drive higher entry prices. In the longer term, there will be resilient long-term growth supported by strong pricing, across market segments. So in summary, the top 10 trend in 2026, macroeconomics, Singapore property remains a safe haven amid global uncertainty. Singapore interest rate bottom out in 2026. Private home sales, strong take-up expected for ECs and OCR launches in 2026. CCR and RCR may offer better values relative to past years. Developer remain keen on prime land size. Private resales, new home versus resale price gaps widens. New TOP supply rebound but still near multi-year lows. HDB resale, more MOP supply and acceptance of million-dollar flats. And also higher BTO supply moderates HDB resale price growth over the long term. And landed homes, sustainable long-term price growth for landed properties. To give you an ERA forecast for 2026, here are our numbers. For the private new home sales, we expect 2026 to have a sales volume of between 9,000 to 10,000 units and a price forecast of 3 to 5% year-on-year growth on new residential homes. And for the private resale homes market, we expect 2026 to have a sales volume of 13,000 to 14,000 units of transactions. And in terms of price forecast, is between 3 to 5% year-on-year growth. And as for HDB resale market, 2026 will see 26,000 to 27,000 HDB transactions at a price growth of between 2 to 5% year-on-year. So, in a nutshell, momentum remains strong heading into 2026. The opportunity is here. Well, that sums up the top 10 trends in 2026. Well, if you like what we are doing, continue to like us in ERA Singapore Social, and at the same time, if you have a feedback, do drop your feedbacks here by scanning this QR code. Well, this is Marcus Chu, signing off today.
Thank you, Marcus, and thank you everyone for joining us today. Now that you have learned about the top 10 trends in 2026, the market drivers behind them, and clear action angles, reach out to our ERA trusted advisors to make your move early. Thank you for spending your evening with us. Have a great day and see you next time.